Thank you, Courtney. I'm just going to wait just a moment to allow all our guests to pop into the meeting and join us today. Welcome to the meeting. This is the Board of Directors meeting for November 17th, 2022. We welcome all of our guests, our staff, and of course our board members. We are presenting materials today. The agenda and other meeting minutes or meeting materials will be available in the CalHFA board section, CalHFA website board section. You can find there as the screen suggests. If you want to provide public comment when the chair offers that during the session, please use the raise your hand function on the Teams application, and we'll call on you at that time. We also want to thank everyone and also ask for your patience today. We're trying out a new platform. We believe we've tested it thoroughly, but with new technology or changes of technology, we aren't always confident that it'll perform 100%, but if something should happen, please bear with us, and we hope that it'll be a good experience today for all. I think with that, I'll go ahead and pass the meeting, get the meeting started by introducing Chair Jim Cervantes.
Good morning, everyone, and I'd like to start off on what I think is really a very positive note to acknowledge that Governor Newsom has appointed a new member to the board, Tyrone Roderick Williams, who is the head of Fresno's Housing Authority, was appointed. He has decades of experience in both the public and private sector in housing, and his experience and expertise and perspective will be invaluable for this board. So, Tyrone, I'm thrilled you're with us. I know you're at a conference in Washington, D.C. I think it's the Council of Large Public Housing Authorities, and you have a little bit of time that you're sharing with us, which we really do appreciate. And I thought, if you want to say a few words to the group, the floor is yours.
Well, first of all, I am honored to have an opportunity to sit at the table with you all. Housing has been my life, and the opportunity to represent the Central Valley, both our urban areas, but equally as important are our rural communities and migrant worker communities. And so I am just elated to be at the table, but also happy to promote the programs that we have. And I know that we'll be hearing more about those later on, and I look forward to joining you in the full meeting in January. And thank you all for giving me this time during this meeting.
Great. Thank you. And again, we're just really very excited to have you on the board and your perspective in so many different fronts. And you're welcome to sit through as much of the meeting as you can. I know you've got the conference going on, so we'll take whatever we can of your time and look forward to seeing you in January. So.
Very good. I'll conclude my comments and my participation at this point, and I look forward to joining you all in January.
Great. Terrific. Look forward to it.
Thank you all.
All right. And with that, I'd like to turn this to Melissa to call the roll, please.
Certainly. Ms. Avila Farias. I'm not hearing Ms. Avila Farias. Ms. Cabildo.
Present.
Chair Cervantes.
Present.
Ms. Gunn for Dr. Imbasiani.
Here.
Mr. Balmer for Treasurer Ma.
Present.
Mr. Olmsted for Mr. Velasquez.
Present.
Ms. Grant for Secretary Castro Ramirez.
Present.
Mr. Prince. Not hearing Mr. Prince. Mr. Russell.
Present.
Ms. Sotelo.
Good morning. Present.
Mr. White.
Good morning. Here.
Mr. Silber for Mr. CalHFA.
Here.
Ms. Miller. I'm not hearing Ms. Miller. Ms. Johnson Hall.
Great. Thank you very much.
Melissa, we have Anna Marie if you want to. She just came on right after you passed her.
That'd be great. Miss Anna Marie Avila Frias.
Here.
Great. Thank you for being here. All right.
Thank you very much. The next item on the agenda is the approval of the minutes from the last meeting of October 20th. The minutes are included in the board package, and unless individuals have any comments on or clarifications on the minutes, I'd like to see if there's a motion to approve.
I move that we approve the minutes. Anna Marie.
Anna Marie, thank you for the motion. So may I have a second?
I'll second it. Delilah Sotelo.
Great, thank you so much. So the motion has been made and seconded. Per our protocol, we approve the minutes by consensus, and we'll do so as such. And with that, then the third topic is the comments by the chair and the executive director. I really don't have much in the way of comments. We have a very full agenda. I think the one thing, just to make sure we keep quorum throughout this meeting, is I think we have 11 board members by my count. Are there any members who think they might be having to leave early? I just want to make sure we keep the quorum integrity as long as we can.
Mr. Chair, I will have to depart early today.
Okay. Thank you.
This is Zach Olmstead. I can stay till probably 12:45.
Okay. Thank you very much.
Chair Cervantes, I would have to depart around 12:45. I have a 1 o'clock ticket.
Okay, thank you. So Melissa, I think if we were to lose 3, do we still keep the quorum?
Yes, I think we'll have quorum at that point. I hope that we don't lose any additional folks, though.
Okay, great. Thank you. And we'll see how we do with the 12:45. But we appreciate the heads up. And with that, I'd like to turn this over to our executive director for any of her comments or remarks.
Thank you very much, Chair Cervantes. And I want to sit down a thank you to all the board members who are present today. It has been another busy month, and the staff will be updating you on where we are with some of our programs. So I just have a few comments. First and foremost, we had a recent election, which of course has both direct and indirect effects on housing issues. So I think it's important to acknowledge, first and foremost, and without getting too deep into that, I want to congratulate our very own pro-housing governor, Gavin Newsom. We are so glad to have him back for another term. And the same for Treasurer Ma. She has been a fabulous partner, an incredible champion for housing, as well as a great member of our own board. So congratulations to Treasurer Ma. The other race I mentioned is the controller, where Malia Cohen has been announced as the winner. I look forward to working closely with her in my role on both the TCAC and CIDLAC boards. Also, since we last met, I had a chance to speak on 3 different panels. 2 of them I mentioned at the last meeting. There was the Rural Housing Summit and the San Diego Housing Federation annual conference hosted by our very own Stephen Russell. I think he will agree that our discussion on the lunchtime plenary where I was joined by Chione Flego from Housing California and moderator Rebecca Louie from Wakeland Housing Development was very rich and seemed to really connect with the audience. Finally, last week I was asked to speak on a policy outlook panel at the UCLA Ziman Center as part of the Levine Affordable Housing Development Program. It was incredible to speak to these young professionals who were taking the opportunity to learn more about the craft of affordable housing development. And I was joined on that panel by people who work on affordable housing policy and advocacy. And now I was able to provide the home ownership perspective, which I find very important and impactful, especially in the affordable housing space. And in fact, I wanted to share some of what I said because I think you will find it interesting. You all have heard me say a couple of things before about how I want CalHFA to get away from just doing the same old thing and really work hard to be innovative. But those are just words until you actually have to do the work and launch something innovative. It's very difficult to push through the research and development required, and even more difficult to push back against critics that say they won't work. And at the same time, show success and impact to those folks who need housing most. But I'm very proud to say that that is exactly what we have been doing with our Forgivable Equity Builder loan and our ADU grant program. With the Forgivable Loan Program, there was a perspective that Californians at 80% of AMI and below could not and would not qualify to buy homes in most of the state, even with our assistance. We have clearly shown that this is not true, as the program has helped families get into their first home in 51 of the 58 counties, including all of the highest cost counties. And as you will hear in more detail later on, the funds are flying out the door, with home buyers getting forgivable loans of around $40,000 each on average. It's the same story for our ADU grant program. There were some who believed that between the high cost of building, education required to see it through, and the rising interest rates, our program would not and could not work. Again, funds are flying out the door at around $40,000 per homeowner. It's amazing because we are helping low-income renters become homeowners, and we are getting new units of housing built in a way that improves the equity position for those homeowners, all for just $40,000 a pop. Our ADU program is the first to reach this scale in the entire country. And I would guess that the Forgivable program is one of the largest low-income homeownership financing programs in the nation as well. This is hard evidence that being innovative and finding new and better delivery systems for housing finance can work. And CalHFA is making that happen. Similarly, I truly believe that big things are coming with our next creative program, the California Dream for All, because we are doing our due diligence with the program design. We are collaborating with all of the different stakeholders. We are focused on equity, and we have a track record of success when it comes to these new and innovative programs. So that's all I have for now, and I will pass it back over to Chair Cervantes. Thank you.
Thank you very much. I'd like to move on to the next item on the agenda, item 4, which is report from the Audit Committee. And I'll turn this over to Audit Committee Chair Sotelo to give us a report on the recent meetings of the Audit Committee.
Great. Thank you very much, Chair Cervantes. And it's nice to see everybody on Teams. It is a very unique platform, so I appreciate the staff venturing into this platform. So what I wanted to do is I wanted to acknowledge that we did welcome a new committee member to the Audit Committee, Dr. Fred White, who joined us on our October 26th meeting. We're very excited to have him, and newly acquired doctorate on our committee. So thank you very much, Director White, for joining us on our committee. Also, I wanted to let the board know that we had another meeting this morning, November 17th. So now we have completed our mandated 2 meetings per year, one on the 26th and one on the 17th. We received a brief overview during our October 26th meeting on the roles and responsibilities of the committees as outlined in the charter. We have our annual review of the charter and the committee determined that there were no changes that we needed to recommend to the board. But we are making that charter available to outline the roles and responsibilities of the audit committee for any board member that would like to review it, and or if you have any questions, we can certainly address those. Also on our October 26th meeting, we reviewed and discussed the audit of the financial statements for CalHFA for the year ending June 30th, 2021. We had a presentation by Mandy Merchant, who is a principal from Clifton, Larson, and Allen. She's a wonderful team member and has been with us for several years and is always very helpful and informative as she reviews the annual audits. She did give us a very clean opinion on the financial statements. It's official. We received an unmodified clean opinion for the audits, for the audit of 2021, which is a huge finding, and we should celebrate Ms. Johnson Hall and the staff for that finding. There were, interestingly enough, and for those board members that have been on for a couple of years, you'll be happy to know that she reported that there were no findings on the single audit of the Section 8 program. This is the second year in which we've had no findings. So again, kudos to the staff for all their great work and making sure that that program remains robust and effective as administered. So that was it for our October 26th meeting. At today's meeting, earlier this morning, we did get a briefing from our Chief Information Officer. Unfortunately, we did not have our Chief Technology Manager, I'm sorry, our Chief Security Officer with us. But we did go through the various cyber threats posed to a government agency body like ours, and what the team has done to safeguard against those cyber attacks, and the trainings that staff have undergone over this last year to make sure that, you know, any of the cyber attack threats that we have seen are properly mitigated. The presentation was very informative. I asked about how we, as board members, could also take advantage of those trainings and of that information as we work and interface on a quarterly basis and, you know, a frequent basis with emails and updates for our board meetings. And I was glad to hear that we could avail ourselves of that training and or those safe practices. So with that, I think we will be sharing the presentation with the board of directors, and you should have it as part of your link to the website with all of that information. So I think that basically covers our both our meetings. It gives you enough information, I think. But if you have any other questions or would like to get more, you know, more information from the audit committee, please ask me now or send Melissa the questions in writing, and we'll make sure to address them. Chair Cervantes, I'm not sure if you want to go ahead and have me take questions now, or we should just go ahead and move on.
I think this is a good point to take questions if there's any that members of the board have.
We can use our raised hand function, our handy dandy raised hand function. Okay, we'll see none. If you think of something after the fact, let us know. But that wraps up my report. And
thank you very much, Member Sotelo. It's always comforting to get a clean opinion.
Yes.
And I did. I was watched the first meeting. It was very thorough, and you know, I really appreciate the good work of the audit committee to keep tabs on these issues that are important, especially when it comes to security. With that, I'll turn to the next item on the agenda, which is the report of the Executive Evaluation Committee. We met October 28th. I'd like to note that we have a new member on the committee, Mr. Stephen Russell, joined us. I stepped in as chair, and that was my first session with this particular committee. And also, I'd like to note that representing committee member Secretary Gaston Ramirez was a BCSH Undersecretary Melinda Grant, who added a lot to our conversation. And I think in terms of a report out to the board and the public, there were three main topics that we touched on. We did review the charter, which we're required to do annually, and we have no recommendation for any change to the committee charter to the board. The second item of note is that regarding salary survey, CalHFA's Director of Administration, Jennifer LeBoeuf, talked through the process by which the agency is engaging a salary consultant to help with a salary survey to review compensation in the organization. I'll note that it's been a number of years since that was done. I think it was last done in 2017, and I can stand corrected on that, but it's been some time. The survey will take a number of months to complete and will be presented to the committee for consideration upon completion. I think it might be a 4 to 5 month process. And we'll see if we can incorporate some of the recommendations in the budget. I guess that's to be determined. And then finally, and most importantly, I think, we went through an evaluation of the executive director and had a salary adjustment discussion. The committee went into closed session pursuant to California law for the performance review of a public employee. We had a conversation that was very thorough and lengthy to go through a pretty thorough evaluation process of the executive director, and that will be discussed in the following closed session with the board. And then following this closed session, the board will take on the committee's recommendation for a salary adjustment for the executive director, and that will be discussed following the closed session. We will not talk about that during the closed session. So that essentially concludes my report on the October 28th meeting of the Executive Evaluation Committee. I'd like to see if the other participants in the committee, Member Russell and Ms. Grant, have any additional comments they'd like to add before we move on to a closed session.
Hello, good morning. This is Undersecretary Grant. Just wanted to echo the chair's comments and just appreciating the process and just respecting the amount of diligence and paperwork and background and discussion, quite honestly, that we went through. I'm very proud of the work that CalHFA is doing and looking forward to discussion ahead. Thank you.
Thank you, Undersecretary Grant.
So if I may, just to echo those comments, I felt that it was a very in-depth conversation. We took the entirety of the time that was allotted for this. In fact, I think we ran over because the conversation was rich, was deep, and it resulted in, I think, a better, it was just a great working environment, and it developed a great appreciation for the role of our executive director here. So thank you. I appreciate my colleagues and the opportunity to serve in this capacity.
Thank you, Member Russell. The next item on the agenda then is the closed session for purposes of evaluating the performance of a public employee, which in this case is the executive director of CalHFA. So for members of the public listening in, the board will return after the closed session ends, and we'll pick up the balance of the agenda at that point. So I think this is the first time I've been on one of these sessions with the closed session. So we're going to give a few minutes for staff to make that work.
Yeah, Chair Cervantes, if I could jump in for a second.
Please.
I just want to just be clear that the closed session will actually cover two topics: the performance of public employee as well as a discussion of pending litigation. I just want to make sure that's on the record.
Thank you so much for the clarity. Much appreciated. And we will return to our session, the public session following our closed session. So let's give it a couple of minutes for to transition to the breakout room.
Okay, let's check to see if all of our board members have returned. Ms. Avila Frias?
Says that she's on hold.
All right, let me move on and we'll check back. Ms. Cabildo,
Hold on, let me get her real quick. Okay, she's back now.
and checking to make sure our board members are back. Let me start again. Ms. Avila Farias. I see her mark. Can you check her mic and see if that's
Yeah,
enabled?
she's enabled. It's just, it says she's on hold. I don't know. I think it might be on her end.
Okay. Ms. Cabildo,
Back.
thank you. Chair Cervantes,
I'm here.
Ms. Gunn,
Here.
Mr. Balmer,
Here.
Mr. Olmsted,
Here.
Ms. Grant,
Here.
Mr. Russell,
Present.
Ms. Sotelo,
Not back yet.
okay. Mr. White,
Here.
Mr. Silber, doesn't look like Mr. Silber's back either. Ms. Johnson Hall,
I'm here.
okay. Mark, can you work and attempt to get back Ms. Avila Farias, Ms. Sotelo, and Mr. Silber?
Yes, yeah, they haven't. Anna Marie's is showing that she's on hold.
All right, I'll let you work on it on the backside,
Okay.
and I think we'll go ahead and let Chair Cervantes get the meeting going again.
Thank you, and thank you all for your patience. We'll hopefully have the balance of the board rejoin us in just a minute here. I would like to note that the board has completed its closed session, and we'll move on to agenda item number 8. One note, just for housekeeping, we're probably about a half hour behind our sort of calendar schedule here. So we have a number of important items to sort of pick up as we go along here. So I'll ask presenters to be concise if that's possible. And we do have a public comment session towards the end of the meeting. We'll also ask individuals to be concise as well, so that we all have the benefit of hearing different perspectives. Do we have the remaining board members back in the room?
See, we believe that maybe Ms. Sotelo, as she had indicated she was going to be leaving early today, may have already left the meeting. I do not see Ms. Avila Farias.
I think
Anna-
she's having some issues and she's gonna try to rejoin the meeting.
Oh. Okay, great. And Mr. Silber is a non-voting member, but I don't see him back yet, but we can continue to work on that.
Okay. I did see his hand raise function go up there just a second ago.
Yes,
So
he's
Ryan
back.
should be here, and Anna Marie, can you test your mic too as well?
Okay.
I'm back. Can you hear
Great.
me? Okay.
Yes, I'm back.
Great,
Okay.
thank you.
Thank you all. We're all adjusting to the technology here, and so far I think we're doing okay. I'd like to move us to agenda item 8, which is the recommended salary adjustment. There'll be a resolution, which is in the packet 22-30. And I'd like to ask our Director of Administration, Jennifer LeBoeuf, to share with the board the committee's recommendation to adjust the executive director's salary. Please take it away.
Yes, and actually, Undersecretary Melinda Grant asked me to share a little bit of a background on this. So prior to the meeting, so the background is that Tina was appointed in late of August of 2021, and the governor's office makes a salary offer to the appointee, and there was some confusion that they offered her a salary that was higher and outside of the salary range that we have that's set by the board through the salary survey. So then they had to reduce that amount for her to actually accept. And so her current salary is slightly below the max of the salary range that is in place right now. Her current salary is 3.1175% below that max. And so the Executive Evaluation Committee had a discussion and made a recommendation to take Tina's salary to the max of the range and to give her a 3.1175% increase.
Thank you. I'd like to see if there are any comments or questions in the group. I believe that Member Russell, you have your hand up.
Yes, thank you. I think an additional part of that discussion at the time was that we were awaiting the results of a new salary survey, that we wanted to revisit the question at such a time as that salary survey was completed.
Yes.
And I think I'd note that the increase of this 3.1175% that the Executive Evaluation Committee recommended was to acknowledge performance by the Executive Director within the bounds of the salary ranges that we can work with. That was the gist of the committee's recommendation. Are there questions, comments, discussion by any members of the board? I see Member Farias has her hand up.
Yeah, I hearing your thought process on that, the methodology the committee utilized, that seems reasonable to support that thought process, knowing that there's going to be a salary schedule revision or study. So I'm supportive of that.
Thank you very much. Any other comments or questions by members of the board? I don't see anything on my system here. And so I will then ask for a motion, and I see Jennifer, you have your hand up.
Yes, I just wanted to add that the committee made that recommendation for percentage increase, but they did not make a recommendation. They did not discuss an effective date. So when you decide, to make a recommendation here, I just would like you to add an effective date. And it's up to, of course, the board, but it can be at any point July 1st or forward, because that was the period of time when she was reviewed.
Thank you for the clarification. Maybe the committee will make a specific date recommendation next time around. I'd like to ask for a motion as to this recommended salary increase with a proposed date. And I see Member Russell has his hand up. I'm sorry, look, you're muted, Stephen.
Very good, thank you. We did want that recommendation to make a strong expression of confidence in the performance of the executive director. I would like to move that we adjust her salary, and if we can make it retroactive, it's not a huge increase. I think we would have done more had we had latitude, but what we do have latitude is time. If we can make it retroactive, and I'm looking at our, if I understood you correctly, that is possible. Is that?
Yes, it can go retroactive back to July 1st.
So I'll start as for an opening motion to suggest that we go to the beginning of the fiscal year. on the basis of the fact that the increase was less than I think we would have offered or suggested had there been more range available.
I second that motion. It's Maria Cabildo.
Thank you. We have a motion made and seconded to approve the executive director's salary by 3.1175%, which is to the maximum in that salary range effective July 1, 2022. Does that encapsulate the motion?
It does. And I would contrast it again. A compelling figure to us at the time also was the increases that state employees had received. I believe it was 14%. So that we were severely lagging, and there were cost of living increases that were given at the state level. And so I just will add that as a comment. The motion is correct as stated.
Thank you. And I believe that since our last salary survey was done, but there is the disparities noted. Okay, with that, we have a motion made and seconded. I'd like to ask Melissa to call the roll, please.
Yes, Ms. Avila Farias. I don't hear Ms. Avila Farias. Are you there, Ms. Avila Farias?
Melissa, she's returning to the meeting.
Okay, we'll come back. Ms. Cabildo? Ms. Cabildo, I don't hear you either.
I said aye. Yes.
Oh, I'm sorry. I didn't hear you. Thank you.
Yes.
Chair Cervantes?
Aye.
Ms. Gunn?
Aye.
Mr. Ballmer?
Aye.
Mr. Olmsted?
Aye.
Ms. Grant?
Aye.
Mr. Russell?
Aye.
Mr. White?
Yes.
And with that, we have an approval.
Thank you.
I believe Anna Marie's returned, Melissa, if you want to grab her vote.
Thank you. Ms. Avila Farias?
Yes.
Great. Thank you so much.
Okay, thank you all very much. We will now move on to our next action item number 9, which is a final loan commitment for the Mainline North Apartments. I'll ask Kate Ferguson, Director of Multifamily, to walk us through this application.
Yes, good morning, Chair Cervantes and members of the board. Can you hear me?
Yes, Chair, I will be recusing myself from this item.
Thank you.
Please contact me when it's time to log back in.
Okay. Thank you very much. The floor is yours, Ms. Ferguson.
Okay, again, good morning, Chair Cervantes and members of the board. For the record, my name is Kate Ferguson and I am the Director of Multifamily Programs here at CalHFA. Today, we're requesting approval of a permanent loan and a MIP subsidy loan for the Mainline North Apartments via approval of board resolution number 22-31. With us today, representing the project developers, Darren Bobrowski, the Senior Vice President of Capital Markets at USA Properties Fund. Also available to answer any questions are Sheena Coe, the CalHFA Multifamily Credit Officer, and Kevin Brown, the CalHFA Multifamily Loan Officer. Next slide, please. The Mainline North Apartments is to be built in the city of Santa Clara and Santa Clara County. The project will include 151 family units with an affordability range from 30 to 70% AMI. Rents for these units will range from 32% below market rents to 73% below market rents, providing very meaningful affordability to our tenants. Support services will be provided by Life Skills Training and Educational Programs, Inc., known as Life Steps, for a term of 15 years, as required under their CIDLAC application. These services include adult education, health, skill building classes, as well as health and wellness services. An affiliate of Life Steps named Lifespan Home, Inc. will act as the conduit lender and ground lessor on this project. Lifespan Home, Inc. will collect funds from inclusionary developers, Related and Ensemble, to loan to the project under one note and deed of trust held by Lifespan. The Lifespan is also acting as the ground lessor. I wanted to just give some frame of reference for the connection between all those entities. Today, I'm requesting approval for a first lien permanent loan in the amount of $23,950,000. The first lien loan will be a 17-year balloon with a 40-year amortization. An additional commitment for subsidy debt via subordinate loan under our mixed income program is also recommended. The MIP loan is must pay hard debt, and the term will be coterminous with the permanent loan. The perm loan and MIP loan deeds of trust are cross-defaulted and cross-collateralized. The primary source of repayment for both the perm and the MIP loans is refinance of the project via a new loan and potential resyndication of the partnership. An exit analysis using CalHFA's current 6.56% interest rate and current cap rates, which are around 4% in the area, results in an estimated refinance value of the property sufficient to fully repay the perm loan and to fully repay all but $775,000 of the then outstanding MIP loan principal and interest. The staff report also provides a stressed exit analysis, assuming a 2% increase to the appraisal cap rate and a 3% increase to our underwriting interest rate. Under that scenario, the project refinance is sufficient to fully repay the balance of the agency's permanent first lien loan and a portion of the MIP loan, leaving approximately $7.9 million in principal and accrued interest to be repaid on the MIP. To the extent that a refinance is insufficient to fully repay all outstandings under the perm and the MIP loans at maturity, the limited partnership agreement requires repayment of any remaining balance via a general partner contribution as part of the final closeout of the partnership obligations. The entirety of the perm and MIP loan outstandings must be repaid, including all accrued interest, prior to the release of the agency's liens via the deeds of trust on the property. I wanted to make that clear, and I also wanted to take just a moment to point out some of the impact of recent market disruptions recent market disruptions in the affordable housing industry are having on our deals. The mainline project is an example of the changes to individual project economics and structure that have resulted from those disruptions. You'll note that from the time of our initial commitment in March 2022 to the June 15th, 2022 CIDLEC TCAC approval, the development budget increased by approximately 22%. The summary on page 6 reflects these changes. It's important to note that 40% of that 22% increase, so 40% of the increased total development cost is attributed to the increase in the total developer's fee, which has gone from $3.5 million to $10.2 million. The developer's fee was increased to increase the project basis, as is allowed by TCAC regulations, which in turn generates more tax credit equity into the deal. This is a typical strategy that we see often in the industry on tax credit deals. Most importantly, I want to note that while the total developer fee increased by $6.7 million, 75% of the total developer fee, totaling $7.68 million, so more than the increase, is being deferred and contributed by the developer to the project. Further details of the developer fee increase explanation can be found in section 5 of the staff report, but I just wanted to run through that for everybody. After reducing the total increases in the budget by the amount of the deferred developer fee, the overall increase to the real development costs on this project has been about 13%. And that was driven by hard costs and financing costs. And that is in line with what we have seen across all of the 2022 MIP deals that have been all the way up to 22% with an average of 10% in cost escalation. So I just wanted to run through those few things. And next slide, please. With that, we're ready to take any questions.
Thank you. I don't see any project-specific slides on my screen here, unless
there was. We've gone to the. This is the only project-specific slide. We started using this at the last board meeting.
Right. I just see the agenda item, agenda 9, and there's nothing.
Oh,
and maybe it's
can everybody else see the slide that says CalHFA financing summary?
I am able to see it on my screen.
I see it on my screen.
I can
Okay.
see it.
Okay, then it's operator error on my part then. Thank you.
Sorry.
Are there any other questions from board members? Actually, before I do that, I'm sorry, Kate, you indicated the developers here. I'd like to see if maybe they have any comments they'd like to make, just to sort of like give us any other color on the project.
Absolutely. Darren, are you on?
Yes, I am. Thank you. Darren Bobrowski with USA Properties Fund. Chairman, members of the board and staff, appreciate the opportunity and the partnership that you've had on this project. As Kate has mentioned, since the earlier part of this year, we've experienced a huge number of challenges, unprecedented increases in interest rates and volatility in the market. Working with staff, we're happy to say we've been able to put a capital stack back together, both based on the creativity of the financing team, including CalHFA staff. So I'd like to commend them on their suggestions on how we can put the capital stack together, as well as the supplemental MIP funds committed to the project to make the project financially feasible. We are building permit ready. We are ready to close on December 8th and immediately start construction. So this is a shovel ready of a project you can get. The project itself is extremely well located. It's within a stone's throw of Levi Stadium, where the 49ers play. It's in a master development area specific plan called Tasman East, which is a redevelopment of older warehouse buildings in the area that are being torn down, and the area is being redeveloped. If you go by the area now, it's 4 to 5 cranes are in the air. Related, Ensemble and Summerhill all have projects under construction. This is an area that is going to be, and those are all Class A luxury market rates projects. So the inclusion of affordable housing in this area is going to be great for these extremely low through low income households. The project's extremely well located with a Caltrain station and light rail within a very short walking distance of the site, as well as other amenities. So we're really proud of this project and being able to bring it together and bring it to this point, and look forward to closing the financing and starting construction next month.
Thank you very much. I'd like to open it up to any board members for questions or comments.
Director Cervantes, I have a quick question of the developer, actually. And
please.
In terms of the market rate competitors in this market, is this an Irvine company dominated area, or what, or Prometheus, or who are the market folks that?
Well, directly related, as a specific area, the Tasmania specific plan is developed. Related, Ensemble and Summerhill have already started construction. The street that we're on is called Calle de Mundo. They are all on the same street. It's like a U-shaped street. So those, what I say, are the main developers. Related, if you're familiar with the area, has another master plan development on the old golf course that they are undertaking. It's a little bit further out than this, but those are the 3 master developers really working on the Tasman East specific plan in this immediate area.
Thank you. Congratulations and good luck on that closing next month.
Thank you.
Thank you, Member White. Are there any other questions or comments from board members? And Kate, I'd like to thank you for sort of walking through the components of that increase. It kind of really caught my eye when I was reading the materials. It was helpful to get a breakout of that.
Yes, happy to. Thank you.
Yeah, much appreciated. I don't see any hands raised from the board with questions or comments, so I'd like to entertain a motion and a second to approve resolution 22-31 for the Mainline North Apartments commitment. I'm sorry, I think I see a hand up. Teresa Gunn.
So I move the resolution be approved.
Great, thank you. Is there a second?
I second the motion.
Great, thank you. We have a second. So the motion is made and seconded. I'd like to ask Melissa to please call the roll.
Yes, Ms. Avila Farias,
Yes.
Ms. Cabildo,
Yes.
Chair Cervantes,
Yes.
Ms. Gunn,
Yes.
Mr. Ballmer,
Yes.
Mr. Olmsted,
Yes.
Ms. Grant,
Yes.
Mr. Russell. Oh, excuse me, Mr. Russell recused himself. Ms. Sotelo is absent. Mr. White,
Yes.
we have approval of resolution 22-31.
Thank you very much. And maybe someone could advise Member Russell that we are done with this item, that we can move on.
I have done that. He'll join us in just a moment.
Thank you very much, Melissa. I think this may wrap up our commit. Well, it does wrap up our commitments for the year. So glad to see we got one other done, and best of luck on the closing, to echo Member White on this. Moving on to item number 10 on the agenda, an update on the mortgage relief program. Rebecca Franklin of Housing Relief Corp will be making the presentation, as I understand.
Yes, good afternoon. My name is Rebecca Franklin. I am the current president of the CalHFA Homeowner Relief Corporation, as you guys all know, as well as the Director of Enterprise Risk Management and Compliance for CalHFA. So I get the honor of serving you guys in two different capacities. At the request of the board chair, I wanted to come in and give you a little bit of a different presentation than I have in the past, which was to mainly kind of go over a snapshot of how we're doing in the program, but also to familiarize the board with kind of our ongoing reporting model that we have. What I'm going to be showing you, it's broken into two slides, is one report that we will be attaching quarterly to your board packet as an informational item. And just like Santa, I'm always here ready for questions if you do have any questions during the board meeting in which that would be attached to it. So, but I did want to walk through the board. It's a good snapshot of how we're doing, but also walk you through kind of how the report's laid out. So if we go to the first slide. The first half. So all of these are cumulative. So this is kind of program launch to current state. So at the very bottom, it will say a month. Then that's a monthly measure, but really this is kind of a snapshot of how we're doing cumulative. If you go to the report itself is really broken down into the overarching goals of the program. As we have talked about at length, when we submitted the plan, we had very focused goals for our program of how we wanted to administer these funds and kind of who we wanted to reach. And so we kind of start breaking it down of like who we wanted to reach, right? That most vulnerable population. So we're looking at the average area median income of the households that we are serving and approving. So we want to make sure that we're helping the low to moderate income households. We also, targeted outreach is a really huge part of the program. It is a really high expectation of the U.S. Treasury Department. So we want to make sure that we're getting the word out, we're getting people aware of our program as changes arise, et cetera. So that outreach results is really, what are we doing? Boots on the ground, money spent, paid media. How are they hearing about our program? There's also what we call expert support. I will note that this is a quarterly measure. So if you see another report and it doesn't change, it's because the reporting cycle. And that's providing that what we call non-monetary half assistance, which means we're not funding an application, but we are helping educate homeowners around their circumstance. And that's through the housing counseling, the HUD certified housing counselors that the NMS program funds, but our program helps do a lot of effort on educating the housing counselors, and we pay for that, the education and the materials, as well as our legal services that we've provided. So we have a legal services grant of $12 million given to the Cal State Bar, who's set up a network of housing focused lawyer services that people can go and get free services. Again, educating the homeowner, may not funding an application, may not meet our criteria for the actual half assistance, but it allows us to be able to get those homeowners educated and maybe get them other options. Average household assistance, that's a good tracking measure for us. And then it gets into the big ones at the bottom, which is our reservations. We're really passionate about those reservations, right? So the first is the 60% of funds will be going to households at or below 100% of their area median income. That's really focused, right? These are low to moderate income households, and we really want to make sure the funds are going there. The The other one is the 40%. That's a California measure. So we have reserved 40% of the funds, the total distributed funds, to households that reside in historically socially disadvantaged communities. And I won't go at length of how we define that. I know I've done that a few times. That's through the 2 different indexes. We are doing really well in this area. I think I'm really proud of the team that we're doing. And I think that speaks to the outreach that we're doing, the multi-prong outreach that we're doing. So right now, as of, I think it was November 2nd that this report was created, there is that 56% of the applications that we have funded have gone to those homes in historically socially disadvantaged communities, as well as funds going out the door. So we track it 2 ways, which is 50% of the funds are going to those communities. So not only is it, low to moderate income, but it's really targeting those communities, and that's set forth by the Treasury guidelines as well. So we really wanted to make sure that we met that commitment with that 40% reservation. Overall, you just see the streamline of applications that are going in. I will say on our dashboard, which is a live feed, we have helped a total of 7,360 households and distributed just under 220 million to date. So I think that's a really strong showing for the program. We are always looking for ways to improve the program, but we really are trying to make sure that the funds are getting out and getting dispersed to people who need them, and what we intended to. If we go to the next slide, that's the second half of this report. So when we're talking about foreclosures, that's a strict timeline. So we want to make sure that we are getting applications and approving them as fast as we can, or determining them. So that's what that box is looking at, is really, are we the efficiency of the program itself? Do we have the right people, the right places, the right training to make those decisions as quickly as possible? Additionally, we're also looking at the decline codes. The program itself has been applauded by the U.S. Treasury Department, as well as I think this board and our HRC board, for the agility and flexibility that we're approaching distributing this funds with. And one of the ways that we look to make changes is to look at those decline codes. So if we have 2 different ways of dispersing funds. One is reinstatement, one is property tax arrearages. So, we're looking at both of those codes very closely to make sure if there are opportunities for us to, look at the program differently and maybe make changes to help more homeowners. The pull-through rates are just looking at, as the applications are coming in, they're being determined. Again, pull-through rate is a number of applications determined over approved. It kind of breaks it down for you there in the tables as well. The last 2 measures on that report are monthly measures. So we're looking at our call center. We want to make sure that people engage with us. People are getting supported through the program. So we want to make sure that there's no notorious, like a 4-hour wait time. I don't know if any other state departments ever have those issues, but we want to make sure that we're really getting in there and making sure that we're trying to get people's questions answered. It's a really big support. We support in multiple language. Additionally, website traffic. So, just looking at kind of where people are going, engaging with there. So that's the report itself. Like I said, when we first started the program, the board did approve the structure of establishing a additional board. So we are obviously running the program through the affiliated nonprofit. So, we are very, very happy to have 2 of our CalHFA board members, Ms. Sotelo and Mr. Russell, sit on the HRC board. So what we do is, the program decisions and kind of, we run that through that board, right? Because the CalHFA board had delegated that responsibility down. But I do want to make sure that this board is informed of the outcomes and the impacts that the program is having with homeowners. And so that's why we've kind of tried to set up the system of the quarterly reports, which would be attached to your board packet, like I said, as an informational item. And then I'm available for questions if you had questions on the status of the program itself. My last thing is to highlight some items we will be bringing to our HRC board in the next couple weeks. They're kind of a program expansion. Like I said, we're trying to maintain agility and flexibility with distributing these funds in an ever-changing housing market and economic position, right? So first is we are opening up, or we would like to propose to the HRC board, to open up the applications to what they call small landlords. So it would be owner-occupied 2 to 4 units. Right now, you have to be a single unit. So, if you even have an ADU on your property, if you, are living in a duplex and occupying one, you still have to occupy one of the units. One of the other proposes is having people come back and reapply. When we first started this planning session, we, didn't know how the pandemic was going to shake out economically and what the impacts would be long term. Obviously, we're in a high interest rate scenarios for others, so that's going to affect homeowners and their options on, you know, what they can do if they're not being able to make that payment. So we want homeowners who have maybe received assistance to come back into the program, reapply. We are going to hold to our $80,000 cap though. So you can receive assistance multiple times, but we're still going to have that $80,000 cap. So we're going to be able to, you know, come back in, get more assistance if needed, but that 80,000 is still going to be in play. So, you know, if depending on what their situation is. And then the largest kind of change that we are proposing to the HRC board is to add to the reinstatement program and expansion where homeowners who received a COVID-19 related partial claim second mortgage, so it's a zero interest second mortgage or loan deferral as part of a workout option. So they maybe were in forbearance for a couple years, they had a high arrearage, they had a high balance due, and last fall they took one of those options. So you have to have created this claim post January of 2020, but the workout option, so you either made a deferment, it depends on what kind of loan you have. We want to be able to have those people apply and be able to have that loan balance cleared up as long as they're under the 80K. And that's really to help the people that we intended to help the first round of this program. Those were the people that had high balances. And while we were waiting between August when we submitted the plan and December when we were approved and able to launch, they're the ones that took the option of a partial claim or a deferment. So we want to make sure that those homeowners are also helped. They may not have a current arrearage, but that we want to be able to help them because those were the people we intended to help with in the beginning. And that really just is a goal of us trying to make sure that, again, when we spoke to the communities, what they said is they wanted to see the funds go out quickly and as soon as possible. And this is us meeting that commitment. We want to be able to take the opportunity to help as many California homeowners as quickly as possible. That concludes my presentation. I'm here for any questions.
My apologies. I've questions from members of the board. I was muted. So Member Russell, I think you have your hand up.
Yeah, I have a comment, not a question. I just wanted to thank Ms. Franklin for her work here. I mean, the CalHFA as a whole has a reputation for being nimble, responsive, transparent, for high reporting standards, and CalHRC has followed in those footsteps. And I really want to just give a shout out to Rebecca and her team for what she's put together here and how she's able to monitor, track, and report to us. So thank you very much.
Thank you. Any other comments or questions from members of the board? I don't think I see any other hands up. Rebecca, thank you so much for a very thorough presentation. It's much appreciated. It's very helpful. Thank you.
Chair Cervantes, if I could interrupt for a moment, I just want to acknowledge that one of our delegates, Melinda Grant, will be leaving the meeting and will be replaced by Sasha Kurgan of BCSH. Thank you.
Great. Thank you for the update. Appreciate it. We will now move on to agenda item 11 for an update on the Forgivable Equity Builder Loan Program. This will be our Director of Business Development and Stakeholder Relations, Ellen Martin.
Hi, good afternoon, Chair Cervantes and members of the board. Thank you so much. Ellen Martin, Director of Business Development and Stakeholder Relations. So I'm here today with several updates for the board, beginning with a recap of the successful implementation and therefore current wind down of our Forgivable Equity Builder Loan Program. If we could go to the next slide, please. Courtney, is that next? I can keep, okay, there we go. So I'll just start with a brief review. As you all will likely recall, the Budget Act of 2021 allocated to CalHFA $100 million from the general fund for the purpose of providing homebuyer assistance. We then allocated 12 million of those funds to fund loans for phase 2 of Caltrans State Route 710 affordable sales program, and the remaining $88 million was available for the Forgivable Equity Builder loan program, the goal of which is to serve a more targeted lower income population and allowing faster equity building for those buyers. Next slide, please. So, as you may recall, the Forgivable Equity Builder loan serves households earning 80% or less in area median income and offers a forgivable loan for 10% of the home purchase price to be used for down payment and closing costs. Most importantly, the forgivable loan is offered at 0% interest and is forgiven over 5 years, which gives these low-income home buyers the opportunity to see significant equity gains in the first 5 years of homeownership. Next slide, please. We launched the Forgivable Equity Builder loan on April 4th of 2022. The program was enormously popular and saw very rapid uptake to the extent that we are now in the process of winding the program down. As of November 1st, we had a total of 1,700 reservations, which translated into commitments of about 75% of the funds. The average forgivable loan amounted to $39,000, which translates to an average home purchase price of $395,000. The program had really strong geographic reach with loans in 50 of the state's 58 counties, with major concentrations appearing in the Bay Area, Capital, and Central Valley regions. Next slide, please. So in terms of next steps, with our funds nearly exhausted, we are in the process of winding down the Forgivable Loan Program. We're working with our stakeholders and our lenders to clearly communicate our funding status and the availability of the product. We're tracking reservations on a daily basis and have procedures in place to halt reservations at the appropriate time. I do, of course, want to remind everyone that the Forgivable Loan had a very specific funding source, which is separate and distinct from My Home and other CalHFA programs. So those traditional programs are completely unaffected. We as staff are really very proud of this program. We're gratified to have helped over 2,000 low-income homebuyers to access homeownership and to have provided a jumpstart to wealth creation through home equity. So with that, I'd be happy to take any questions the board may have.
Thank you very much. Are there any questions or comments from members of the board? I do not see any hands raised, in which case we'll move on to the next agenda topic, also with Ellen Martin, on an update from the California Dream for All program.
All right, well, thank you again, Chair Cervantes. So I'll turn now to providing an update regarding the Dream for All program. I'll start with just a review of our initial program design parameters, and then we'll move into an update regarding our stakeholder engagement process, as well as our approach to homebuyer education. Molly Ellis, our lender services manager, is also available to assist me with any questions that the board may have. And then we were planning to also present on our consumer marketing and outreach approach, but with consideration to time, we will fast forward through that part of the presentation, but Kathy Phillips, our Director of Marketing and Communications, will also be available for any questions that anyone may have. If we could go to the next slide, please. So as a reminder, back in September, we presented the initial program parameters to the board. To recap, the Dream for All program will provide a shared appreciation loan for up to 20% of the home's purchase price to pay for down payment and closing costs. First-time homebuyers at or below CalHFA income limits will be eligible. And when the homeowner sells, the program will be paid back the original loan amount plus a pro rata share of the appreciation in the home's value, which will be capped at a multiple of 2.5 times the original loan amount. And then we will also be including social equity features offering a more favorable shared appreciation terms for our low income borrowers. Next slide, please. In terms of current status, our single family staff is really in the thick of developing the legal, technological, and program infrastructure that we need to stand the program up. As we discussed back in September, this is typically about a 10 to 12 week process. And then on a parallel track, we are developing our approach to homebuyer education. We're developing loan servicing processes and procedures, and we're also holding our advisory working group meetings, seeking input on various aspects of the program from a broad array of industry experts and stakeholders. So with all this going on, we are still targeting and on track for a go live date in Q1 of 2023. Just as a reminder, after we go live, our lenders will need some time to build their own infrastructure and to train their staff. So it will take a little bit more time beyond that for us to start seeing reservations. Next slide, please. So I want to take just a bit of time to offer an overview and update regarding our stakeholder engagement process, namely our public listening and advisory working group sessions. So back in September, we conducted 3 public listening sessions that offered an open forum for members of the public to learn about the Dream for All program and offer comments on design and implementation. We also sought input via an online survey and email submissions. So this slide outlines our participation levels. We had about 244 individuals register and 163 people actually attended. Of that, 86 of those individuals provided us with comments. We then published the recording on our website and noted that that recording has received about 600 views to date. Next slide, please. So from our public listening sessions, we received input on a number of topics, most notably those identified on this slide. That includes things like the eligibility criteria for the program, the social equity features of the program, what are the repayment events that trigger maturity of the shared appreciation loan, marketing, outreach, and education, and ways to facilitate tribal assistance. And then, of course, the most popular comment had to do with comments and questions related to our timeline and the anticipated delivery of this product to the market. Next slide, please. So we've also convened an advisory working group that includes about 25 representatives from the policy, advocacy, and lending arenas, as well as other industry leaders. We held our first meeting on October 18th on the topics of homebuyer education and consumer disclosure, as well as consumer marketing and outreach. Our next meeting will be on November 30th, where we'll take a deep dive into the social equity features of the program. Next slide. So I'll move now into just a brief overview of our approach to homebuyer education and disclosure. So as you will recall, this is a really critical element of the Dream for All program, and the authorizing statute specifically calls out the need to focus on these elements due to the complexity of a shared appreciation loan product and the fact that very few borrowers will be familiar with this type of loan structure. Next slide. We are currently working on developing a homebuyer education module that is specific to shared appreciation. It will be a little bit different from our traditional homebuyer education because we will require homebuyers to take our specific education course. That course will be free to the consumer and will be provided in multiple languages. Upon completion of the course, which will include assessments to ensure understanding, the home buyer will receive a certificate documenting that they've completed the required education. So it's really important to us that this education be very consumer friendly with clear and understandable examples and graphics that will really help to ensure that our borrowers understand this contract that they're entering into. That's really important to us. We're also looking at how to develop refresher courses and continuing education modules for our home buyers to make sure that we're continuing to have touch points with those borrowers. Our working group members really validated much of this approach. They had some additional suggestions regarding specific types of examples to include, as well as how we might integrate housing counseling agencies and develop education videos that those agencies and other organizations can share as part of their outreach and education. And we are absolutely working to integrate that feedback that we received. Next slide. So moving on to our upfront and ongoing disclosure. Our consumer disclosure documents will follow much the same pattern of homebuyer education, with our primary focus being on readability, clear examples and graphics, and ongoing communication with the borrower. We will provide a standard upfront disclosure document, but we will also make sure that we regularly communicate with our borrowers via a supplemental mailing and emails that reiterate those upfront disclosures. Since we're capping the total appreciation that the program can receive, that will allow us to specify the maximum amount each borrower will owe. Our working group members also encouraged us to rely on clear graphics showing multiple examples as part of the disclosure process, and having some way for the borrower to acknowledge receipt of those ongoing disclosures. And they further encouraged us to be very transparent regarding any fees that the borrower may incur. So we're looking at those items to integrate that feedback as well. So that concludes my presentation on Dream for All. As I mentioned, we won't offer a formal presentation on marketing and outreach today, but our marketing team has developed a comprehensive marketing plan that integrates the public and working group input, and it builds on our successful marketing campaigns for Forgivable, ADU, and MRP. And if you have any questions in that regard, Kathy Phillips, our Director of Marketing and Communications, is also available for your questions.
Ellen, thank you very much. That was very comprehensive. Are there any questions from members of the board? I don't see any hands raised. Thank you. That was really very helpful. And we're moving on to agenda item 13, which is an update on the ADU program. Again, Ellen Martin will lead us through this as well.
All right. Thank you again, Chair Cervantes. And now and finally, I will provide the board with an update regarding the ADU grant program. If we can go to the first slide on this one. So just a quick overview and reminder, we offer a $40,000 grant to fund pre-development costs associated with the construction of an ADU. The grant is available to homeowners earning less than CalHFA's income limits. Our current appropriation is $100 million in state general fund monies, which means that we can offer the grant to fund about 2,500 ADUs with that authorization. Next slide. So as we discussed last month, with the onboarding of a new lending partner that brings maximum financing flexibility, our ADU grant program has really taken off in the last several months. As of November 7th, we had 2,100 reservations, and we've committed $84 million of that original $100 million authorization. In terms of our partner activity, HPP Cares is our new partner who really helped to unlock the program through their third-party managed construction escrow service. They took in about 1,200 reservations in August and September, and then they actually stopped accepting reservations for a couple months so that they could catch up. A couple weeks ago, they just reopened their portal, and they reached their target number of new reservations within about the first 15 minutes or so of opening their portal. So we've also brought on 2 additional partners that can provide the same flexibility and service that HPP Cares provides. Each of those partners expects to do no more than a couple hundred reservations, but what that means is that our original $100 million authorization will in all likelihood be easily exhausted by December. Next slide, please. So as we also discussed last month during the last budget cycle, CalHFA was allocated an additional $50 million for the purpose of ADU financing. The budget bill authorizes use of the funds to extend the current grant program, as well as other specific authorized uses that are called out here on this slide. And then separately, AB 157 requires us to assemble a working group that will explore avenues to assist homeowners to access financing and capital to build an ADU. Next slide, please. So before we get into next steps and with consideration to time, I do think it's appropriate to take a bit of a pause to consider some of the accomplishments of the ADU grant program thus far. By the time we exhaust our original $100 million appropriation, we will have catalyzed the production of about 2,500 accessory dwelling units with a state subsidy of only $40,000 per unit. Relative to other state programs to incentivize housing production, this is a really good deal. The agency has dedicated significant resources to building up the internal infrastructure needed to deploy the funds through the grant program. And as part of those efforts, I don't think it's any exaggeration to say that our single family staff have really become the premier experts in ADU finance. They know this ecosystem, they know its limitations, they know its barriers, and they understand its opportunities. So they've also developed really strong partnerships with lenders, nonprofits, and other ADU partners. And those partners have also invested significant resources in building out their own infrastructure in response to the grant program. And we certainly appreciate and absolutely applaud those efforts. I think one of the greatest achievements of the ADU grant program is that it's helped to demonstrate that there is indeed significant consumer interest in building an ADU, even among low and moderate income homeowner markets. So that has really helped us to move the needle on what types of consumers are able to build an ADU. And we're opening up this wealth creating opportunity to a broader market. And that market interest has really contributed to significant innovations in ADU finance. We're seeing our lending partners being increasingly innovative in terms of offering ADU financing products that work for our consumers. Things like second mortgages with managed construction escrow accounts, using rental income to underwrite construction loans. In other words, the private sector here is really leading the way in terms of the financing innovation and flexibility that we all want to see at the federal level to help stimulate more ADU production. Next slide. So based on the feedback that we've received from various partners and stakeholders, as well as the state's fiscal outlook, we are currently planning to pause the ADU grant program upon full disbursement of the original $100 million appropriation. That will really give us some time to thoughtfully evaluate how to deploy the next 50 million in collaboration with a range of stakeholders, including our partners in the administration, the legislature, and lending communities, and in consultation, of course, with the CalHFA board. Given the cautious fiscal outlook for the state, this pause will really give us time to engage with the working group and consider their recommendations regarding how we can calibrate the existing program and or otherwise maximize the use of the next $50 million. So we anticipate meeting with the working group in late 2022 or early 2023, after which we will report back to the board with outcomes and recommendations. And that's all I have on ADUs. And again, I'm happy to take any questions that the board may have.
Are there any board members with questions for Ellen on the ADU program? Is there a hand raised?
Chair Cervantes, this
Yes.
is Courtney. We do have hand raised, but they are members of the public at this point.
Right. So we'll take, appreciate that. We'll take public comment at the end of the meeting. We'll have a spot for public comment on this. I'd like to see if there are any board member comments or questions. I don't see hands raised. I will note that this program has been phenomenally successful. I'm just kind of curious, is there, Ellen, not to put you on the spot here, but a back of the envelope as to, given the spend rate or for this program, could you accommodate 200 million, 500 million, $1 billion? I mean, is there a sense as to, how much you could put through given what we've experienced thus far? I'm just back of the envelope.
Yeah, that's a great question. Thank you so much. So HPP Cares, who is one of our major ADU lending partners, has a waiting list of, or a communications list of about 5,000 homeowners that are interested in building an ADU. So of course, we don't know that all of those homeowners would qualify. We do also have other lending partners through whom they could qualify. But I think it is safe to say that the market out there is robust and certainly exceeds the demand, certainly exceeds supply in terms of the availability of ADU grant funding.
Okay, thank you. Member Russell, I think you've got your hand up.
Yeah, I guess I have a question about whether, I recognize the fiscal cliff that the budget that the state is presenting to us is really a challenge. And that the idea of getting input, maybe refining this program before we spend what might be the last tranche of funding, I understand the value in that. It's heartbreaking though when something is so popular as this. I would like to ask, one is, have we explored at any point in time whether we could do a recyclable version of this, of financing? Also, that's my first question.
Okay. So I think that that is probably the primary topic that we want to explore with the working group, whether or not there is a viable approach to incentivize ADU production and ADU financing that is more recyclable in nature, precisely with consideration to your comments, Board Member Russell, about whether or not there will be additional ADU financing available in this next budget cycle. So I think that recyclability, just like Dream for All, is a very large priority, and we want to explore whether or not there is an option that would stimulate more financing innovation. I do want to comment that I think, as I mentioned in my presentation, the ADU grant program, with its demonstration of the market for ADUs, has absolutely stimulated financing innovation, and exactly the kind of financing innovation that we want to see. We're seeing our lending partners develop products that work for the low and moderate income homeowner, and help them to access building an ADU. So we're really gratified to see that type of financing innovation, and we hope to see it continue. And I think we are also open-minded with regard to the potential that the ADU grant may be the most direct way to continue that momentum with regard to financing innovation and producing ADUs.
Okay. You've somewhat answered my second question, which is, are there lasting changes that you think that we have already made in terms of how these are perceived, the escrow accounts, things like that? And could you speak to what some of those particular changes might be?
Yeah, absolutely. And I think you're right. I did touch on it in terms of demonstrating the market. I mean, I think all of us were surprised. We were hopeful, but we were all surprised by the level of demand and the level of interest out there in building an ADU. And so as we moved sort of through the ADU grant program and worked with our lending partners to develop further financing flexibility, we also saw those lending partners start to innovate in a way that really helps to free up more ADU financing. The escrow management services that are currently being provided by some of our partners didn't exist before. Our lenders are also using that approach as a risk mitigant, so that they can free up more ADU financing and make more ADU loans. We're also seeing lenders do things like use rental income to underwrite construction loans and then portfolioing those loans, which is a huge development. So we are certainly hopeful that those changes will be long lasting, and that the ADU grant has helped to spur this market and demonstrate to the lending community that this market exists out there, and to the extent that they can innovate and provide lending products that meet the needs of this consumer set, I think we can encourage a whole lot more ADU production.
Great. Well, thank you for that report. Thank you for helping us understand this kind of devil's bargain we're looking at here, or challenging situation. Thank you very much.
Thank you so much.
Chair Cervantes, if I might just add, not only have we seen an uptick in the private lending space, but also we've also seen an uptick with various cities and municipalities who are now very curious about how they might be able to work at a regional level. So to some extent, I really do feel that this is a success, not just because we are helping homeowners come up with a way to create generational wealth for themselves, but also to spur an industry in helping to potentially provide affordable units in ways that some folks may have thought were not possible before now. So I'm very, very proud of this program and the work that this team has put in.
Thank you, Tina. Any other questions, comments from the board? I think I'll note that I don't think
One more, Chair. This is Sasha Kurgan.
Okay, please.
From BCSH, and I just wanted to add one appreciation for CalHFA staff also working really closely with the Department of Housing and Community Development. I know that Chief Deputy Olmsted is on right now, and Director Velasquez has also been tracking this closely. But the reason why it's important that CalHFA and HCD have worked together is because HCD is working on the land use components that really make it much easier to build ADUs. And this has been a cascade of legislation since 2016 that continues to build on itself. And so we might have shared this in the past, but just for the benefit of the group and for the public, just to say that over the last, looking at the data now on HCD's website in their housing element implementation and annual progress report data dashboard for those that want to follow along. But looking from 2018 through last calendar year, the state saw a really dramatic increase in the number of ADUs permitting. And so this is before the program. Just with the land use tools available, 53,000 ADUs were permitted. Now less than half of those were constructed because it's a development pipeline, so we see it going, but we keep seeing this number rise. In 2017, 2016, the numbers were in the hundreds, and now we're approaching 10,000 ADUs permitted per year. So I am really excited about all of these trends in the state. And Ellen, to your comments on the pause, and I want to thank you for including the map to see where these reservations are happening, because I'm really curious during this time to use this as a point of reflection on where the grant is able to reach. And that's not just about program outreach. That could be about local willingness, local awareness, and that's a place where we can keep leaning on the technical assistance, both from CalHFA and from HCD. So I want to encourage that continued partnership between the teams, and I'm really excited to see more data about the outcomes. Thanks.
Thanks so much.
Thank you very much. Any other board comments or questions?
Yeah, Director Cervantes, Fred White, just to follow up on Sasha's statement, and this could be for Tina or Ellen. What's the outreach like with the cities in terms of their ADU programs? I, for one, know Los Angeles, we have an ADU program, and I've encouraged them to reach out. So I just want to know what's the outreach?
Yeah, thank you. Great question. Significant. So we have reached out to all planning directors across the state of California. And then we've also conducted more targeted outreach with various cities, particularly where we know there's a lot of ADU production activity, Los Angeles being one of them. And, you know, to the points that were made earlier about production, we do see that LA is absolutely leading the way in terms of ADU production. I think they are permitting something like 60% of the new ADU permits. And so we see them also kind of leading the way in terms of receipt of our grant funds. But that LA County as a whole is extremely active with regard to ADU production, and we've certainly been in contact with the local jurisdiction to discuss strategies to collaborate.
Great, I appreciate that feedback. As we update this program, those types of data points included in terms of regional municipalities, that'd be very helpful to see.
Thank you, Member White. Any other board member questions or comments?
Yes, Board Chair Cervantes, Anna Marie here.
Please.
Yeah, I just want to, thank staff. This has been a project over a year and a half, and it's just been amazing to just see it evolve and be at the state that we have to create a pause, or are considering a pause. as someone who truly believes in ADUs as being the vehicle to getting more affordable housing units online in California, I think, and also as an individual who built one right when the legislation happened almost 20 years ago, I have, firsthand experience of the importance of those for generational housing. And I think what we're seeing in the market is coming out of a pandemic, everybody saw how their housing needs changed drastically, and generational housing needed drastically. And so I'm very proud of the work the staff has done. I did speak with staff, and I'm a little conflicted because, while I feel there needs to be improvements in the program, and we have a big picture, everything from dealing with the appraisals that, don't include ADU units, to including higher income individuals that have the land, and dealing with some of those income limitations to be more inclusive of all incomes. And dealing with some underwriting issues. I mean, it's far from perfect, which, I think pausing sometimes allows the opportunity to recalibrate and fine tune. As I shared with staff, my biggest concern is that we pause and then we don't ramp back up, even though, the momentum is there. But, the political and economic climates change very quickly as well, that, if we pause it, that it might end up getting shelved and we don't ramp back up. So I'm conflicted, but I also understand, I have all faith in our staff and our director to ramp it back up, because it sounds like the short window is between December and January, and then coming back to the board with some realignment, or revamping, not sure what the right word is kind of what I'm understanding what is before us. But I am interested. I know we do have some community partners. So I think before we do any type vote, I would love to hear from the community to really influence, because, I totally support staff, and, my vision would be in the greater good of the public good. But I also am a little concerned about this momentum being lost if we pause even, this brief moment. So those are just my 2 cents at the moment, but I'm looking forward to hearing from the public.
Thank you, Anna Marie. Any other board member comments or questions? Don't think I see anything. Ellen, I'd like to thank you and the staff and the whole team working on this for a program that's been really phenomenally successful, which seems like a really great case study of how public and private sectors can work together to sort of enhance what is really a public good. I know a lot of cities are looking at ADUs to meet the RHNA requirements or help meet RHNA. My community certainly is. And so it's significant in the big picture of things. It's kind of a pity there's a pause, because, to echo Anna Marie's comments, there is really momentum here. Hopefully the pause is not a long one. But we'll see how that all manifests itself. So with that, thank you so much for all of your presentations. They're all very helpful. We'll move on to the next item on the agenda, item 14, an update on the single family market. Don Cabier, Erwin Tam will be talking through kind of the dynamic in the market, which has shifted significantly from a year ago. So maybe I'll pass that to them, please.
Chair Cervantes, are we not having public comment on the ADU?
We're going to have that at the end of the meeting. We have public comment as agenda item 17. We'll pick it up there. So we'll move.
All right, I'll get going. Good afternoon, Chair Cervantes and members of the board. For the record, I'm Don Cabier, the agency's Chief Deputy Director. And today I'll be joined by Erwin Tam, the agency's Director of Financing. And together we're going to provide the board with an overview of CalHFA's single-family financing model and discuss how today's economic challenges and the market volatility we're experiencing are impacting that model. In addition, we're going to discuss what we plan to do going forward to hedge the situation and provide the agency with alternative executions to improve future financial results. Next slide, please. To help frame the conversation, I'd like to start by reaffirming with the board the role that CalHFA plays in the single-family ecosystem. First and foremost, CalHFA is not a direct lender. We are statutorily prohibited from lending directly to consumers, and our business model is designed specifically to leverage the capital markets to serve low and moderate income first-time home buyers, which we define as families that have not owned a home in the last 3 years. It is also important to remember that CalHFA is also statutorily required to fund its operations from its lending activities. So in addition to leveraging the capital markets, our products need to turn a profit in order to fund our operating budget as well as our future lending activities. The single factor that makes our program relevant in the marketplace is our ability to provide homeowners with their minimum required down payment, as well as assistance for closing costs. Without down payment assistance, CalHFA would not have a functioning single-family program. Prior to the financial crisis and an oversubscribed tax-exempt bond volume cap, CalHFA's financing model relied on the issuance of tax-exempt mortgage revenue bonds, the proceeds of which we used to purchase whole loans from our lender network, which were held on our balance sheet and serviced in-house. Due to the real estate risk inherent in that model and the bond financing structures used at the time, the model proved nearly fatal to the organization during the financial crisis. Consequently, we shifted our model to the delivery of government and GSE conforming mortgages into the secondary market rather than trying to retain them on our balance sheet. In short, or said another way, we acquire our loans from our lender partners and we pool them together with our master servicer based on certain characteristics, primarily interest rate coupon and duration, and we securitize them and sell them as mortgage-backed securities to investors through the capital markets. The model has proven very profitable for the last 4 or 5 years and has mitigated a lot of the real estate risk inherent in owning and servicing whole loans. Finally, another important aspect of the model that I want to touch on, which is regardless of our financing strategy, is the focus that CalHFA places on sustainable homeownership and on assisting historically underserved groups and communities. It's not about getting families into their first home. It's about giving them the best products, tools, and educational opportunities to be successful homeowners. Next slide, please. Some of you may remember this slide from a presentation I gave last January, and during that meeting, our conversation focused really on the lack of housing supply and the run-up in home prices. And while housing supply and affordability still remain a critical issue for California, broader economic challenges have further eroded the housing market. At the risk of being obvious, inflation and its corresponding impact to consumer confidence and investor yield requirements have impacted the revenues generated from our current delivery model. So today I'm going to spend a few moments discussing how inflation and the Federal Reserve's attempt to get control of it have impacted the secondary markets, which are critical to our single-family program pricing and profitability. Next slide. So we all know that inflation has had a rapid run-up since mid-2021, and it's still hovering at or near 40-year highs. It was only last week that the rate of inflation showed positive signs of slowing, dropping to 7.7 in the month of October from 8.2 in September, and we have a long way to go. One of the key tools used by the Federal Reserve to stimulate or throttle the economy is to lower or raise the federal funds rate. This rate governs how much banks charge each other to borrow funds from their reserves on an overnight basis. As you can see from the chart, the Fed has aggressively raised the Fed funds rate since May of this year with the aim of boosting short-term borrowing costs throughout the economy. This in turn reduces supply of credit, makes loans more expensive for everyone, and this is one of the primary tools that the Federal Reserve uses to help quell inflation by reducing the amount of money that's flowing through the economy as a whole. The federal funds rate typically influences the markets in a number of ways, but the most relevant impact to this discussion is seen in the rise of the 10-year Treasury rate, which is a recognized benchmark for mortgage rates. Mortgage rates historically adjust as a spread to the 10-year Treasury bond. Next slide, please. As you can see from this chart, the rapid run-up in the yield on the 10-year Treasury bond tracks closely with the rapid rise in mortgage rates as investors are requiring much higher yields given the rate of inflation and the uncertainty about the future of the economy. The gold line in the chart is the rise in mortgage rates, and the light blue area is the rise in yield on the 10-year Treasury bond. Next slide. The Fed also influences mortgage rates through their broader economic policy, which you see a lot in the sense that they buy and sell debt securities in the marketplace to help provide liquidity. Early in the pandemic, the cost of borrowing money was more expensive than the Fed wanted it to be. So in response, they announced that they would buy billions of dollars of treasuries and mortgage-backed securities. The move was to support the flow of credit and liquidity, which helped push mortgage rates to record lows. Many of you may not know, but commercial banks and the Federal Reserve themselves make up over 50% of the investor base in the secondary market. Until recently, the Fed owned roughly 25% of all outstanding mortgage-backed securities. The dark blue section at the base of the chart on the left shows the Fed's ownership interest in outstanding mortgage-backed securities over time. The chart on the right reflects how the Fed has used the investment or disinvestment in mortgage-backed securities to influence borrowing costs in the capital markets over the last 13 years. Now let's fast forward to May of this year, where in addition to rapidly raising the federal funds rate as a way to slow inflation, the Fed announced that it would cease the quantitative easing strategies of providing liquidity to the secondary markets and instead would move to a period of quantitative tightening by allowing their portfolio of mortgage-backed securities to basically run off. No surprise, the effect of less market liquidity is higher mortgage rates, as there are fewer investors competing in the MBS market, and those that remain now require a much higher yield. The point of the next two slides is to provide a visual of how all of these things that we've just discussed have impacted the value of mortgage-backed securities being sold on the secondary market. Over the last year, GSE-backed MBSs at a 5% coupon have gone from being sold at a significant premium, in this example, trading at 109 a year ago, to the current market price, which is being discounted in the mid-90s. This slide represents the pricing of conventional Fannie and Freddie MBS pools as of last week. This is the trading price of Ginnie Mae MBSs, which are typically made up of FHA loans, but can include VA, public and Indian housing loans, and USDA loans. It too has been trading at significant premiums just as early as a year ago and is now priced at a significant discount as, in order to elevate the yield and attract more investors. This is just another visual to show how the rapid shift in the MBS market, where just a short time ago, lower rate MBS securities traded at a premium, and now higher rate mortgages are actually garnering still discount pricing as the Fed is still in battle with inflation and it's translated into just significant market volatility, which I think we've all heard anecdotally in the news. The gold line represents the rising mortgage rates, and the light blue area represents MBS pricing declines. Next slide. Finally, this slide tells the story of how all of the above information has impacted CalHFA's current market delivery. On the left, you see our product pricing has been impacted. CalHFA's mortgage rates virtually doubling and in some cases tripling in the last 12 months. Similarly, on the right side, you can see how rapid inflation, the Fed's tightening of monetary policy, and reduced investor base have all cut into the profitability of the current market execution. Please note that there's no need for panic. The small bar on the right side of the dotted line only reflects the first quarter of fiscal year 22-23. However, all the volatility in the marketplace, we expect that 2023 fiscal year will be at best on par with last fiscal year. And that could in fact be optimistic given the wind down of our forgivable equity builder loan program and given the high home prices in California, the rising interest rates, and also the fact that the forgivable equity builder loan program that Ellen briefed you on is winding down and is largely accountable for the strong production numbers we had at the end of last fiscal year and have really contributed to the success of the first half of this fiscal year. I guess additionally, I think, we do have some, I think, light at the end of the tunnel. I think the California Dream for All product will come online kind of right at the right time, but it's still very much unknown how that product will be received in the marketplace. And so that's still to be determined. I'll go ahead and I'm going to apologize if I've given you too much background information, but I wanted to be sure that I provided sufficient context to lay a groundwork as to why we believe that our single family financing strategy needs to evolve a bit to include alternative executions as economic uncertainty, market volatility are still expected to continue for some time. So with that, I'm going to turn it over to my colleague Erwin Tam to discuss the move to a best execution strategy on the part of CalHFA's single-family program.
All right, thank you, Don. Erwin Tam, Director of Financing. So I have 3 slides for you. The first slide is to answer the question, so how have we financed mortgages in the past and what is the current process? As Don mentioned earlier, prior to the financial crisis and the Great Recession in 2009, CalHFA financed and serviced individual mortgages. The agency would purchase mortgages from its lender network, issuing tax-exempt bonds using the volume cap as allocated by the California Debt Limit Allocation Committee, or CDLAC. Net revenue would be based on the rates on the individual mortgage less the interest rate on the bonds. Please note that there are other costs associated with servicing mortgages and the issuance of bonds, but for simplicity, they're not shown in this diagram on this page. CalHFA took large losses through the ownership of individual mortgages, and in 2009 generally switched to securitizing these mortgages through one of the government-sponsored enterprises, GSEs, such as Ginnie Mae or Fannie Mae. These were then purchased issuing tax-exempt bonds using the same volume cap as allocated by CDLAC. And the structure of the net revenue would be similar to that as before, whereby the agency would receive the difference between the MBS coupon and the interest rate on the bonds. In 2013, CalHFA took a very different approach to funding homeownership programs, which included exclusive use of the TBA market. In this structure, individual mortgages were securitized as before, but sold at a predetermined price to an investor. Like in the sale of any security, there's a single exchange of payments, and CalHFA's net revenue would be realized completely upfront. As discussed in a presentation a few months ago, and as Don just mentioned, investors in the TBA market were supported by the Federal Reserve's significant investments over the past few years. When the Federal Reserve pulled back, it led to a decline in execution for the entire market, including a direct impact on CalHFA's rates. The alternative structure is listed in the far right diagram. Similar to prior structures, the agency will be issuing bonds secured by revenues it receives from mortgage-backed securities. CalHFA in this case would be issuing federally taxable bonds. And on the next slide, the question is, what's the financial impact on the agency? While we believe that the agency will benefit overall from a diversification of execution method that includes both the issuance of bonds and TBA execution, there will be an impact on the timing of revenues. TBA execution results in a one-time upfront revenue to CalHFA. The issuance of bonds creates a different structure of revenues. CalHFA will initially incur costs at the closing of the bonds and prior to the expected receipt of revenues over time. And depending on the volume of bonds issued by the agency, this will potentially cause a material decrease in revenue in the short term in exchange for additional revenue in the future. It should be noted that the agency will be actively managing this process for best execution, and that a bond financing will be executed only if it provides superior economics on both a net present value and a nominal basis. On the last slide here, what's next? What are the next steps for the financing? The board has approved the issuance of bonds and hedging of these securities through the approval of resolutions prior this year. Also in compliance with the board-approved investment and debt management policy, we have conducted a competitive process for selection of senior managers for the single-family bond financing and have appointed 2 firms to serve as our initial senior managers. The agency has also retained bond counsel and anticipates entering the capital markets in January or February of next year. This concludes my remarks, and I'm open to take any questions on this informational item.
Thank you both very much for this presentation. It's a lot of information to pack into a short time as we're at the back end of the meeting. I do want to know for the board, I mean, I talked earlier with Don and Erwin about this topic. The shift in the marketplace that we deal with is really changed the environment that we live and operate in, and the potential shift in the way we receive revenues going forward. So it seems like this is a topic that we'll really delve in much more into, I think, next year. But laying the groundwork here seemed important as we're coping with a fundamentally different reality than the last decade that we've been operating in. So I kind of wanted to sort of flag this as a big picture issue that the board will need to be grappling with and understanding especially as it pertains to the revenues that CalHFA looks at, to fund going forward. I know we're kind of getting along here. I want to get to public comment, but are there any board member questions, comments on this before we move on? I'm trying to, it's a little hard for me to see who's on. Are there any,
Yeah.
Anna Marie, do you have your hand up? Or Steve?
Anne Marie was up first.
Yeah, I think I see Anna Marie.
No, I think it just doesn't come down. Sorry, I'm just getting used to this new platform. I'm okay, thank you.
No worries, thank you.
So mine is just a comment that I really appreciate that this kind of looking ahead and anticipating and responding to the market is so critical, that I appreciate the briefing now, and I expect that this will be a significant part of our board discussions monthly as this is implemented. There's a lot to unpack there. And as we take these critical steps, I think it's important that we as board members are fully aware of what each of these steps and what the anticipated impacts are. So thank you for, Don, and to your staff and Erwin for bringing this forward in a brief but comprehensive manner. Thank you.
Okay.
Gotta watch this.
Thank you, Member Russell. Any other board member questions or comments? I don't see any. I'd like to echo Member Russell's comments. Thank you both very much for your overview here. It will certainly be circling back to this again. With that then, agenda item 15, information reports. There were reports in the package. This is an opportunity for board members to ask any questions on staff on these topics beyond what our review of what was in the package itself. I will see if there are any board member questions for staff. I don't think I see any hands up on that topic, in which case we'll move to item 16, which are just any other board matters that board members would like to raise for the board to discuss, or maybe to set up for a future meeting. You always have the opportunity to reach out to staff on that as well. And I don't see any hands here. So we will now move to item 17, public comment. We received written comment. I want to acknowledge that prior to the board meeting, and all of which seem to pertain to the ADU program. And would welcome the opportunity for public to offer comment on any topics within our purview. I would ask individuals to limit their comments to 2 minutes, and we'll probably like to allocate 15 to 20 minutes for public comment. I'd note that we've lost some board members just given the time here. I want to make sure that as many people as possible can hear public comments, and I would just ask that if an individual has a comment that was already echoed by a prior speaker, maybe note that and allow time for a future speaker to make a comment. So with that, Melissa, if you could please pull up the public members for the comments that have their hands raised.
Sounds good. We have, so I'm going to just be clear that we're going to take 15 minutes worth of comments. We hope to get everybody who wants to comment in during that amount of time. I will be timing you, and you at 2 minutes, if somebody does run long, you will hear hopefully an audible sound, and appreciate if you will conclude at that moment and we can move on. But thank you very much. And Courtney, I'd like you to go ahead and call on those folks that have their hands raised and give them the opportunity to unmute their mics.
Absolutely. Okay, for our first public commenter, it's Jared Chase. Please unmute your mic and go ahead with your comment.
Hi, sorry, did that work?
Yep.
Oh. Hi, thank you so much for this. I really appreciate it. I was actually just wanting to comment regarding the grant fund. I think that it's a really valuable program, and there should be a strong push for additional funds. I mean, it's nice to hear there's another $50 million, but to know that the $100 million was spent so quickly, I think that the 50 million is really just a drop in the bucket compared to the households that really need this program. and would otherwise not be able to build ADUs.
Thank you very much.
Okay, we'll move on to our next
Okay,
guest.
Whatever the bitch told us to call in and say that.
Ryan O'Connell, please go ahead with your comment.
Just want to be clear that we'll need you, those folks that are commenting, to unmute your mic when you get ready to speak.
Ryan O'Connell, we're ready for your comment now. Please unmute your mic and go ahead. Okay, we can move on to our next commenter and circle back to Ryan. He might be having issues. Meredith Stowers, if you unmute your mic, you can go ahead with your comment now.
Yes, thank you for having me, Board of Directors. Let's be honest, Phase 2 has been overwhelmingly successful because of one nonprofit when you actually look at what percentage of the grants have been handed out, and that is HPP Cares. Lenders in the Phase 1 program had 1 year to provide grants, and I understand they only managed to provide 30. During Phase 2, HPP Cares had 2,500 families ready to go within 6 weeks. Why is that? That's because we worked on this program together, built to Fannie Mae standards right in advance, complete with construction oversight to Fannie Mae standards. They've already passed audits. They continue to pass audits with flying colors, but they've been limited to a much smaller number of approvals because others have claimed they are quote unquote hogging approvals. As a result, HPP Cares is being slammed by very frustrated families on social media. I understand they have more than 8,000 people who have applied. Originally, by the way, this program was built to recycle funds. I love that idea. We can try recycling funds this week if you don't pause the program and allow us to continue and work with that. We've been collecting demographic data, by the way, working with the UC Berkeley Turner Center and USC Price. We can have those demographics presented to you. I think you will be very impressed about the effectiveness of this program. Let us raise the pause for those willing to recycle funds and more. If we do that, let us let us also allow to hold off on the loans until closer to the time of construction and refund that grant program at the time of construction. So you are getting your money back. But let's not pause. This grant may not be needed forever. We need this grant to continue ADU progress until HCD can enforce these new permit laws. But it is fine. This program is fueling the fire behind this
Ms.
ADU
Stowers,
movement.
your time is up. If you could conclude briefly, we'll move on.
Join us on the, if you're in LA, join us on the ADU Homeowner Fair this weekend. Thank you.
Ms. Stowers, thank you so much.
Okay, next we're going to, and I'm sorry if I'm mispronouncing your name, Pume Nayandu. Please unmute your mic and go ahead with your comment. Are you there? It's MPUME. We're ready to receive your comment. If you could unmute your mic and go ahead. Okay, we'll go back to Ryan. Ryan O'Connell, if you are ready to give your comment, we're ready for you. If you just unmute your mic, please. It looks like we've lost Ryan, and oh, Brian, are you there? Okay, if Ryan or Pume Nayandu would like to leave a comment, both of your mics, if either one of you are ready. So Melissa, at this time, it doesn't look like I can get
Okay.
either one of them to.
I believe that those are all the hands that are raised at this time. If anyone else is interested in making a comment, please raise your hand now and we'll call upon you. For those folks that unfortunately didn't get a chance to respond, or anyone else who would like to comment, Courtney will show the web address. You can provide your comments there on the board section of the CalHFA website, and we'll have that later in the meeting. You can submit comments according to the public comment guide instructions, and we appreciate that. Thanks. Oh, it looks like we have some hands.
We have some new commenters. Catherine, people, if you want to unmute your mic and go ahead with your comment, we're ready. Catherine, people. Okay, it looks like we lost Catherine, so we will move to Dolores. Please unmute your mic and go ahead with your comment.
Hi there, thank you so much. I appreciate the opportunity. I am one of the 2,100 or maybe now 2,500 people that have applied, and I still don't have a reservation yet. But what I wanted just to mention, I think this program is fantastic and very forward-thinking. One of the things that I wanted to mention is that when you're thinking about this in the future and your pause that you're going to take place, is if you could look at, in terms of the people who are getting the who are applying and getting the funds, is looking at maybe providing some for people, maybe more than others, for people who have lower incomes. So, if I make, $50,000 versus $200,000, it's the same amount. And so I think that you're going to get, just a very different type of response. And for someone like me who doesn't, is not making $200,000, it kind of doesn't feel great to be in that same category as somebody who does make $200,000. And so just something to think about, but much praise to the creators of this. And I'm hoping that I'm one of the 2,500 that get the grant before it gets exhausted. Thank you.
Dolores, thank you very much.
Okay, moving on, we have, oh, she just dropped out. We have Ryan O'Connell again. Ryan, if you want to leave, make your comment, just unmute your mic. If you click on your mic icon, it should unmute it for you. Okay, Steph, you are unmuted if you would like to go ahead and leave a comment. Okay, we'll try one more. Chelsea Alfaro. I would say at this time, Melissa, that we have no further public comments.
Thank you, Courtney. And Chair Cervantes, we'll turn it back over to you.
Thank you very much. And it looks like we've covered all the ground in the agenda. And I really appreciate the board, staff, and our public for sticking with us to the end here. We've covered a lot of ground. I think with that, I'd like to move for an adjournment if there are no objections. So any objections to adjournment by members of the board? Don't see any. And then I consider this meeting adjourned. I wish you all the best for Thanksgiving and the year end, and we'll look forward to getting together with you all in the new year and hopefully more in person. So with that, meeting is adjourned. Thank you all very much.
Thank you. Happy holidays all.
Thank you.